Next week promises to be another volatile week. Another week where you can't take your eyes off the headlines and the markets for 1 minute. It's hugely important passage of time for the global economy and beyond.
Welcome to the long and short of the week ahead, a production of Eurizon SLJ Capital that takes a look at the macroeconomic themes of the week ahead and has been recorded for professional investors. My name is Matt Jones, Head of Distribution for Eurizon SLJ Capital, and I'm joined today by Neil Staines, Senior Portfolio Manager. Welcome back, Neil. It's great to have you here with us.
Thanks very much, Matt. It's great to be here.
So, against what has been a very complex macro backdrop at the moment, the UK comes back into focus next week. So, how are we thinking about the UK and UK data?
Yeah, absolutely. Thanks very much, Matt. It's been a very complex macro backdrop indeed as the global trade uncertainty continues. And now in some ways the 90-day tariff pause from the US was a relative disadvantage to the UK, having attracted only the baseline 10% level originally against much higher levels globally. Nevertheless, it is likely that the UK's financial market fortunes will be more dependent on the evolving risk backdrop than the specific UK factors at the current complex juncture, that risk backdrop looking increasingly fractious. Now, next week, we get the UK employment report for February and March on Tuesday. It's going to be an important gauge to see how employment is faring more broadly. And we get CPI for March, that is, on Wednesday. And again, this growth and inflation trade-off, very important for the Bank of England's rate trajectory over coming months. Now, the GDP print for February was stronger than expected this morning. Rachel Reeves was quick to claim credit, but it's more likely to be a function of front-loading of manufacturing exports ahead of the recent tariff announcements. Ultimately, we continue to see a weak macro backdrop for the UK and a more activist Bank of England ahead as fiscal tightening further weighs on the consumer. A glimmer of hope, perhaps, comes in the form that we could see UK rates significantly lower over the course of 2025.
Now, despite the reciprocal tariff pause this week and, of course, the escalation of tariff threats on China, the global trade and economic data is clearly in focus. So, what are we looking for in the global economy next week?
Absolutely, yeah, thanks, Matt. Indeed, with US-China trade tensions escalating in an unprecedented manner, the global economy is under the spotlight indeed. We discussed this topic further in this week's blog, but implications for supply chains, for geopolitical alliances, and regional and global economic trajectories are very significant at the current juncture. In addition to closely watching further tariff headlines and rhetoric from the US and China in particular, on the data front, next week brings a number of events. Firstly, the German ZEW print for April. This will be a very important gauge of sentiment in Germany as we trade off between the economic stimulus domestically and the uncertainties that we're seeing on the global front. Secondly, we get the China suite of data. That's GDP, industrial production, retail sales, investment and unemployment, all for the first quarter or for March. And that again will be a very important gauge as to the benchmark level of China growth pre this current period of uncertainty. And then on Good Friday, we get Japanese CPI. Now, it's an incredibly complicated backdrop for the Bank of Japan at the moment, with inflation pushing for rate hikes and the risk and growth backdrop, not to mention the tariff backdrop, weighing on a slightly more cautious monetary policy outlook. On the central bank front, next week, we get the Bank of Canada. We expect unchanged, but it will certainly be an interesting narrative, or there will certainly be interest from the broader market for the Bank of Canada's assessment of the impact of trade changes on their growth and inflation dynamic and what that means for the policy reaction function. And the ECB also next week are likely to cut 25 basis points to 2.25%. Now that 2.25% is within the generally accepted band of neutral rates. And so it'll be important to see what the narrative is around the current rate trajectory at the moment, given that we are now very close to that neutral level. We get updated projections in June, so we're not expecting anything on the economic front at this meeting, but markets do expect another rate cut in June at this point in time. Overall, it's a big week for the global economy and a really big week for global assets in general.
Now, with US tariff policy continuing to take centre stage, it's not hard to imagine that the US will continue to be the dominant focus for markets next week. So how are we looking at the US into next week?
Yeah, absolutely. Thanks, Matt. It's the focus clearly does remain on the US, and that's not just Trump and his lead on global trade policy and tariffs, but also in terms of the US financial market impact on global risk appetite and positioning. As well as the obvious focus on Trump, Bessent and other White House speakers next week, we do get a number of Fed speakers, and they will be a very important gauge of the Fed's thinking on the relative importance of the, in inverted commas, transient tariff impact on inflation against the negative implications on demand and financial assets on the Fed monetary reaction function. Beyond that, we get more from the Q1 earnings season in the US, with notably more banks, airlines, and on Thursday from Netflix. Focus will be on the forward earnings projections or not, because it's possible that some of these companies may pull their guidance given the extreme uncertainty at the moment. Now, either way, next week promises to be another volatile week, another week where you can't take your eyes off the headlines and the markets for 1 minute. It's hugely important passage of time for the global economy and beyond.
Fantastic. Thank you, Neil. A very complex and interesting week ahead for us indeed. In the meantime, though, I think we have quite a lot to look forward to this weekend, do we not?
We do indeed, not least the sunshine. It's a full Premiership schedule after an exciting midweek of European action. Liverpool versus West Ham and Newcastle versus Manchester United, likely the pick of the weekend's action. Formula One moves to Bahrain after a very interesting battle at Suzuka. Norris will be keen to reverse the order this weekend. But for me, it's all about the Masters Golf and the challenge for the green jacket. After a wonderful start from Justin Rose yesterday, having laid down the gauntlet at 7 under, Rory back to even par after a great start, but Scheffler, Aaron Rai, DeChambeau, Lowry and Morikawa all in the mix, and it looks set to be a wonderful weekend of action. Much like the financial markets at the moment, I won't be able to keep my eyes off the weekend's action for very long at all.
Great stuff. Thank you for joining us and for outlining your thoughts on the week ahead. I look forward to catching up with you again next time.
Thanks very much, Matt. It's been a pleasure.
Thank you for joining us for the long and short of the week ahead. Further insights are available on our website, Eurizon SLJ Capital.com. We look forward to you joining us again next week for more insights into macroeconomic events and the long and short of the week ahead. Information, data and views were accurate as at the time of recording. The views expressed by presenters are their own and do not necessarily reflect those of Eurizon SLJ Capital, Eurizon Capital, or the Intesa Sanpaolo Group. The information and opinions contained in this recording are for information purposes only and do not purport to be full or complete. The recording is directed at professional investors only and is not intended for and should not be relied upon by other investors. The information in this recording does not constitute an offer to buy, sell, or the solicitation of any offer to buy or sell securities or any derivatives.